Hey everyone, glad to have you back. Today we're talking about tax refunds. Tax refunds are a tricky topic because people love receiving tax refunds, right? Who doesn't like to see money come back from the government after filing and paying your taxes? But see, that's where it gets a little tricky, right? Is a tax refund actually a good thing or not? First, we are going to go over what a tax refund is. As you pay taxes throughout the year for your employer, they might overpay taxes, right? In that case, you'll get a tax refund. The government actually calculates how much taxes you actually do owe at the end of the year when you file and say, hey, you actually overpaid, so here's the money back. In other words, what I'm trying to say is that that money was already yours originally, and the government, all they're doing is giving it back to you. The last statistic released by the IRS claims that there have been 96 million tax refunds. That's a lot of tax refunds. And the average tax refund is $3,039 in 2022. Remember, it's very important that we don't compare in personal finance. These are averages, and folks who make a lot of money and have a large tax refund are going to skew this number. So it's important to keep in mind that personal finance is very personal, and if your tax refund is not $3,000, it doesn't actually mean anything. And there's so many different approaches to tax refunds and how to optimize your taxes that this number is almost meaningless. It does give you an idea about how many folks are expecting a tax refund. Growing up, I received a tax refund every year, or at least my parents did. Right, so that was a nice little gift, especially if you're from a low-income family. It's nice to get a little cash back from the government every once in a while, and it's like, it sort of feels like a treat, right? You can use it to go on vacations, you can use it for savings. In our case, we used it for prep school, right? So, not ideal for me as a kid, but something you learn to appreciate as you get older. In other words, what I'm trying to say, it's normal to receive a tax refund, right? But let's get into why a tax refund is bad. Right, the whole purpose of this video. And every once in a while, you'll see an article out there that says, hey, a tax refund is not ideal, right? It's not the best way to optimize your money. Really, it's an interest-free loan to the government. Let's break that sentence down into a couple parts. Remember, what a tax refund is that you're overpaying the government in taxes and then they give it back to you. If you avoid overpaying them in taxes, then you get to keep the money up front. And the key point here is that interest-free loan to the government. Right? What's really happening is that they keep the money, you overpay them, but they don't invest it or do anything with it. They just keep it. When you get the money back, it might actually be worth less due to inflation, right? So in some ways, you're losing money. But if you did have the money up front, right, that money was, instead of being sent to the government, you had it in your paycheck every month. You can think about ways to grow it. And when I say grow, I mean it means increasing your net worth, right? This can include paying down debts, right, or just investing it. I'll say for a quick example, right? Let's say if you had tax refund of $2,000, and this is $2,000 that you've overpaid in taxes throughout a 12-month period. Now, if you didn't get a tax refund, right, and if say your tax refund was near $0, so that $2,000 was actually given back to you in each of your paychecks, then you'll be getting $166.67 each month. If you were to invest that amount every month into the stock market on average with a return rate of 7% yearly, then that $2,000 would actually turn into $2,075.09. $75, not huge, but remember, investing is a long-term game, right, for many of us. And it's more about investing early so that you can have your money grow over a long period of time. The way we look at it is it's $2,075 versus $2,000 you would get back at the end of the year when you file for your taxes. Right? So it's very important to understand that your money could be growing instead of just sitting in the government's hands doing nothing. And remember, time in the market beats time in the market, right? I'm going to emphasize that again. It's very important to start investing early. If you were able to survive without the tax refund and wait for 12 months to get it at the end, then potentially you could be in a state of just investing it off or paying down debts. There's many ways to growing your net worth when you have more cash on hand, especially if you're financially responsible. So how can you do this, right? How can you effectively minimize your taxes and optimize wealth generation, right? We already went over the optimizing portion of it. Really just gotta invest your wealth, right? There's other ways to go about it, and then maybe you wanna talk to a tax professional or a financial advisor to really get down to the nitty-gritty details. But in terms of really reducing your taxes, it really comes down to paying less taxes to the government or avoid overpaying them. And if you're working with an employer, you remember that form you filled out at the very beginning of your employment, the W-4 form, where you specify your withholdings? You usually write a number in saying, here, withhold this amount of cash for me for each paycheck, or and so on. You basically would ask your employer or reach out to the HR department and say, hey, can I change my withholding? Basically, you will fill out another W-4 form and it would take effect the next pay cycle or whenever HR decides to take it into effect. And that would reduce the number of taxes you would pay per paycheck. But make sure you're very careful about this, because if you withhold too little taxes, the opposite happens, right? Instead of getting a tax refund, you get a tax bill. Not as nice of a surprise, right? Obviously, you don't enjoy paying more in taxes. And then once you do that, you get more money in each paycheck, and then you can do whatever you want with it, whether it's paying down debt or investing it. But there is an argument to be made that tax refunds are good. First of all, for folks who have problems saving money, right? It's a very real thing. Some people have a hard time just not spending that money right away when they get it. It's sort of a forced way. It's a forced savings account, basically. If you overpay in taxes, the government's going to hold that money until you file for your taxes. So you can't get it out right away, right? You can't just use it whenever you want. You have to file your taxes, and then you get a lump sum payment back. And then a lot of folks actually save it, right? Or use it for other activities like vacations. Although keep in mind, it doesn't bear any interest, it's still better than not having anything. Another thing to keep in mind is that if you can expect a tax bill at the end of the year, maybe it's worth having your employer withhold more money, right? If you decide to trade a lot in stocks, it might be a good idea to withhold it, because if you have a lot of gains, then that tax refund that would have been a tax refund would go towards paying that tax bill that you would have gotten. If you really don't like receiving a tax bill, then having a tax refund or a lot of money that may be potentially refunded to you to pay down that tax bill is a good approach. Obviously, consult with a tax professional to really understand where you're going when it comes to changing out your deductions and also changing your withholding, right? To really understand, are you actually optimizing your taxes, or you're making it a lot more complicated for yourself? I mean, as you can see from the statistics, a lot of folks do actually get a tax refund, and they get a substantial amount back. And I am guilty as being one of those folks, and that's fine, right? Of course, I can optimize my wealth, right? I can change my withholdings to withhold less, and then in a way, I can invest that money. But I don't, right? Because I like to receive a tax refund at the end of the year. It feels good. We personally use it to fund our vacations. We put it into an interest-bearing account, and it just sits there until we have a vacation. And I think it's important to recognize that, your financial health, your personal finance is personal, right? And you want to make educated decisions. And as long as you do, it's fine not to always make as much money as possible. Not everything is about optimizing wealth generation, but it is about understanding that you're consciously making that choice not to do so for whatever reason. As long as you understand that, then that's okay, and that's fine. Hopefully you learned a good amount about tax refunds and why we received them. I know when I was young, tax refunds were sort of this magical amount of money we get at the end of the year because we expect it. The government's so nice to give it to us, but that's not actually the case. The case was that we overpaid in taxes, and now I fully understand that, and I'm okay. All right, hopefully that was helpful. Don't forget to like, subscribe, and I'll see you in the next video. Thanks for watching.